I was actually against property in the beginning. My parents, probably from a long time ago, were just saying, hey, invest in property, invest in property. I didn't really know too much other than the fact that my money would be tied up for like 30 years. And so that always kind of put me off until a friend who I used to work with, he was telling me how he bought in Perth recently, and then that kind of kickstarted the conversation.
In the last 2 years, you've bought how many properties?
Now, from last week, my offer got accepted on the third property, so now 3.
Crazy. Ladies and gentlemen, welcome to another episode of PropSpotter. PropSpotter, the smarter way home. Today we have a special guest, someone I've known since 2020, 2021? 2021. His name is Matthew Scotchu. We go a little bit back, Matthew. Why don't you tell the audience, how did I first meet you?
Well, I was just a young kid and I applied for Stake, the investing platform, applied for a job. Well, actually, Sean messaged me from LinkedIn.
That is correct.
I was looking for a new job. I was working at Westpac at the time, and I was doing a lot of investing through the Stake platform, trading. And I looked at the Stake LinkedIn page. Sean messaged me, asked me if I wanted to come in for an interview, and then the rest is history. I joined Stake, was there for a good, well, still there, 4.5 years later. Somewhere along the line, Sean decided to go out and do his own thing. He was working on stuff the entire time, I'm pretty sure, and he's continuing to do that. And
I don't think so.
Just an average guy doing average things. And now, Sean is working on PropSpotter.
Yeah, so, you joined Stake 2.5 years in. What essentially got you interested in property investing? Because I remember you were big on stocks. We used to talk stocks all day long.
That's true.
What got you into property?
That's true. Back in the day, I was really big into, stocks, trading, and I was actually against property in the beginning. My parents, probably from a long time ago, were just saying, hey, invest in property, but they didn't really run through the numbers. They didn't really give me any examples. So I didn't really know too much other than the fact that my money would be tied up for like 30 years, pretty much. And so that always kind of put me off until a friend who I used to work with from Westpac, he reached out to me, can't remember what it was for, and he was telling me how he bought in Perth recently, and then that kind of kickstarted the conversation because he was probably the first person like my age that had actually gone out and bought a property himself and gone through the entire process. So that's kind of what kickstarted the interest in me looking into property. And I did some research online, got really into it, and realized that there was so much money to be made, and I decided to switch my focus.
And so, Chu, are you the type of person that goes down a rabbit hole?
Yeah, for sure. For sure.
Because I've seen that multiple times at work and even in your personal investing journey, whether we're talking about a stock or we're talking about properties these days, you go down some big rabbit holes.
Yeah, for sure.
Right? And so that first one that was in Perth, right? Tell me a little bit about that rabbit hole. What'd you go down?
Well, I happened to do a course that
by none other than
PK Gupta at the time. And it was my mortgage broker, mate, who he was at the time, he hadn't become a mortgage broker, but he was interested in it. So at the time he was just working at the bank, and he mentioned he did this course. And so I split the course with him and I got really into it. I got really into the concept of the data, looking and understanding how to, I guess, really just break down the market and what factors drive prices. And that course was, I would say PK's course was really good in terms of getting someone from a complete noob to really understanding the basics of how to go about property purchase all the way from, identifying a suburb or even macro first, and then identifying a suburb, and then the specific property selection around what you should look for, like the street specific data and like the type of property itself in terms of configuration and land to asset ratio. So all that stuff from a complete noob to getting to a pretty decent spot and being able to go through the process, negotiate, buy the property. I think that course was really, really helpful at the time.
And how long did it take you to go from, complete newbie, like you said, all the way to where you actually signed the contract on the first property?
So I think I started the course back in August 2023, and I was pretty much ready to put offers down within, I would say, 2 months. And I was looking at the market the whole time. And then it ended up being, August, October. So probably starting around October. And then it took me probably another 2 months, multiple offers. Perth was booming at the time, offering way over, competing with other offers, going through that whole process because it was my first time, not wanting to overpay, not wanting to miss out. And so it took probably another 2 months, and I would say 3 to 4, maybe even 5 missed offers.
Wow.
Until I finally landed something.
Yeah.
And I paid, overs at the time.
Yeah. I remember this. We were in the office, right? And so the Stake office, and you'd walk by my desk and be like, oh, I just placed an offer on this property.
Yeah.
Oh, the agent's telling me there's been 23 offers on this.
Yeah.
Oh, Sean, why is this so hard?
Yeah. Yeah.
But you got in there at the end. And
I did.
And that's what matters. So when did you sign that contract for Perth?
It was December, January. I remember settlement was around Feb, and it was
Okay.
probably 8 week. That was standard settlement for Perth back
So
then.
just to be clear, we're talking like 22, 23 months ago? No.
Yes. So
yes.
basically almost 2 years ago now.
Yes,
Or
right.
basically 2 years ago now.
And
Yeah.
so in the last 2 years, you've bought how many properties?
Now, from last week, my offer got accepted on the third property, so now 3.
Crazy. So, ladies and gentlemen, for those out there who think property investing's hard, it can't be done. You can't buy multiple properties in quick succession. Matthew's living proof of that. He's just bought 3 properties all on his own without using a buyer's agent and with the help of PropSpotter.
That's right.
Right? So now, second property, first property completely on your own. Obviously, you've done PK Gupta's cause. You had me in the office biting down your ear a bit and chomping the bit a little bit here and there.
That's right.
Second property. Let's talk about it.
Second property. So second property was, I think I started planning for the second property pretty much straight away after, I settled on the first one. So that would have been the repayments and everything was, kind of set up. It was my first property. So that was probably around March of 2024. So pretty much then I started thinking, all right, I want to go again. Because I basically gotten addicted to the concept of this asset accumulation and, being like a property mogul and getting super deep into it. So I would say around March is when I started looking again. And so at the time, wasn't too sure. Was speaking with Sean. That was early days. And Sean really helped in identifying, well, first of all, macro location. We did a lot of analysis at the time to identify that, Melbourne was the next boom. And this was a very controversial take at the time.
Yeah, I mean, I think we were chatting because I was looking to buy in Melbourne as well. PropSpotter was starting to form. And so Chu came on. Chu's his nickname. Yeah, those listening. But Chu came on as sort of that first pseudo client. We're testing the concept. We're testing to see what works, what doesn't. And we spent many hours in those early days really discussing what's the next play for Matt. And we actually realized that the next play is probably the same play I'm going to do, slightly different budgets, but Melbourne. And I recall having conversations with you while I was driving home from work, essentially that Melbourne was relatively underpriced to the rest of the country. It was going to have the largest population in the country coming up to 2050. And the fact that you could...
2030, I think even.
2030,
2030,
right?
yeah.
And the fact that you could, even at that time, buy a house and land on greater than 500 square meters for less than $500,000 or just over $500,000 with less than a 30-minute drive to Melbourne CBD was insane because prices like that hadn't been heard of in Sydney since, 2015 and before? And so that represented tremendous value. And from a yield perspective, what were we talking? 4.5?
When we first started looking, I think 4.5, that you'd be lucky to get 4.5. There were very few examples where you could get 4.5.
Yep.
Or maybe just 5.
Yep.
So an example was Dallas, right? At the time.
Yeah.
Dallas, I think, was selling for $500K, give or take. And, at the time, I think rent was $450-ish, $430 maybe. So you were just at 4.5.
Yeah, and I think it was Easter long weekend 2024 where I purposely organized a family trip to Melbourne. And I think I called you up that Saturday because I'd gone to a couple of open homes in Dallas and Meadow Heights and I was sending you messages of the properties. Some of them were absolute dumps. I will never forget this one that was selling for $430,000 fibro on 600 square meters of land. But that property needed some work, but was currently being rented for $400 a week. And so that was practically a 5% yield sitting right there in metropolitan Melbourne, 19, 20 Ks away from the CBD. So I think most viewers already know I ended up buying in Frankston North. There's plenty of videos about that and what I bought. But Matt, what did you end up guiding yourself towards?
Well, because of all the controversy at the time around Melbourne, the Melbourne market, everyone was bullish on Queensland, all the markets in Queensland. Perth was still booming. So I think Queensland and Perth or WA in general were the big markets. So South Australia was still booming, but it was kind of, I thought it was too late in the cycle to get in on those markets, even though Queensland's still booming today. Crazily.
The whole country's booming.
The whole country's booming. But you just look at Queensland and it's ridiculous. But that's a whole nother conversation altogether. But from my learning from Perth was that, I was buying in a really hot market. You end up paying way over. And so I was thinking, okay, what if we take not controversial, but the opposite side this time for the second property, which is Melbourne, a much quieter market. Even investors online and property chat, half of those really seasoned investors, even they were the opposite of bullish. They were quite bearish on Melbourne as a whole because of the new laws, the migration out, government deficit, whatever. There was all this stuff, right? Land tax. Yeah. And so that really made me question, am I making the right decision going to Melbourne? So I fluffed around for quite a while, to be honest. And during that time, early suburbs I identified, like Meadow Heights and Dallas, for example, they started moving, right?
Yep.
Everything else was either backwards or your other, high-end or even mid area, kind of, 1 mil plus, they were all either flat or going down. But Dallas, we saw it ticking up.
And just for our viewers, this would have been May 2024?
April, May 2024.
Yeah, so just post me going there for Easter where there was no one at the open homes. And all of a sudden, give it 3-4 weeks, houses started getting sold a lot faster.
Mm-hmm.
Prices were moving up on the ground. The real cheap houses, I remember, were getting sold in days where they used to sit on market. And in particular, I actually remember this house with a granny flat. It was like a shack out the back. And I went to call up the agent a day after it had been listed in Dallas. This would have been May or June 2024. And it was sold.
Yeah.
And that's when I went, okay, something's happening out here.
Yep.
Right?
That was a granny in Dallas.
Yeah, house and granny. It was the granny at the back was practically needed a whole renovation from memory. But that got sold for $500,000.
Wow.
Yeah.
That would be what? Today?
700, 720, 750.
Yeah, there you go.
Somewhere in that range. It depends on how crazy auction day gets. But I think another thing to highlight is back then, there weren't even auctions.
That's true.
There were a handful of auctions. I went to one in Meadow Heights.
True.
And then the house there sold for $425. That was again Easter long weekend. But no, generally there were not auctions as well. And everything was just private sale. Today, whole different kettle of fish.
That's true.
And so Dallas, Meadow Heights, where'd you end up?
Yes, so because of all the fluffing around, I was very bullish on Meadow Heights, Dallas, for the reason that, it was landlocked in terms of no real supply coming on. It's right opposite Greenvale towards the west, which is a very premium suburb.
Yep.
Really, really nice houses, mansions basically, selling for like $1 million. So the differential was really high, right, in terms of, demographic and type of house and price. And then towards the east, you've got this major industrial zone. Can't remember the area. What's it? Like near Broadmeadows, there's a whole major industrial zone there.
Campbellfield?
Yeah, exactly. So lots of jobs and really close to the city. So maybe 25 minutes to the city. And, that, and along with other reasons, I thought, this is a really good spot. But I dilly-dallied because of all the uncertainty.
Yeah.
Right? And so then that's where eventually around July, with the help of PropSpotter, we ended up identifying, because my budget was really tight at the time, Werribee. So my budget was really like a hard 530, managed to get in 3x1 on just over 500 squares in Werribee for $525K. And that was around corner block. Yes, corner block. Established home for $525. That was back in July.
What's that worth today?
Well, today, I checked CoreLogic the other day. It said $595.
And, given the market at the moment, I'd say Melbourne's running probably 10% behind CoreLogic.
Mm-hmm.
Right?
Yeah.
So realistically, would probably 650 is a reasonable number to assume if you were to put the property on the market today.
Yeah. If you look at comparable sales, looking around, probably around that range, yeah.
125 grand in, 18 months?
18 months, yeah.
Crazy.
Yep.
Crazy. Simply by identifying where the value is and buying the right sort of asset. That's where you can get through property investing and through using PropSpotter. So, Matt, what did that property end up renting for?
Well, that was the trade-off. So the rent in Werribee ended up being on purchase $420. And I think vacancy at the time was around 1.5%, roughly there, and it was ticking up.
And what's vacancy today in Werribee?
Oh, I believe it's 3 if we check H tag, or even above 3. And then if you check SQM's is slightly lower, like 2.5, but I think it is closer to 3 if you just look at the listings online.
Yeah. And so, I did a previous video on Melbourne's vacancy rates and why that can be a problem for some investors. In July 2024, I recall it took you, 4 to 6 weeks to get a tenant in?
Actually, it wasn't too long.
Yeah.
It wasn't too long. It was less than 2 weeks.
Okay, great.
But the thing is, I didn't have a big selection of good tenants to choose from.
Yeah.
So I ended up renting it out to an older couple who were on pension, and the rent ended up being around a third of their income, give or take. So that wasn't the most optimal tenant, but I didn't really have too many choices, and it was either wait longer or accept that tenant.
Yeah.
So it was a trade-off.
And that's what life is all about. It's all about trade-offs, right? And so we got into a booming market, but we didn't get a very high rental yield.
Yep.
And essentially Matt had to make do with a lower rental yield. Similar story for myself over in Frankston. I got a slightly better rental yield, but again, the vacancy rate has ticked up. And right now we have PropSpotter clients and others that we hear about that are waiting 3-4 months to get a tenant when their properties turn up vacant, or engage into a price war and be the listing with the most amount of value at the lowest possible price to get a tenant in the door. And that sometimes can mean dropping $50, $60, $70 a week in rent. So overall, Melbourne, right choice, right time, right asset, and you're now sitting pretty.
Yep.
And so you reached out to me 90 days ago, give or take?
What are we now in December? So this was around Yeah, August, about 3 months ago.
The same excited Chu, ready to go into another rabbit hole. After going to the rabbit hole of Melbourne, he decided to go down the rabbit hole of
Tassie.
wow,
Tassie. The forgotten state.
Tassie. Never thought I'd see you as a Tassie man.
Nah.
Why Tassie?
Well, I mean, a few different reasons. I guess starting with the macro, we're talking about capital city cycles. That's kind of where we start off with, right? So over the past, say, 5 years from COVID, Queensland had its run. All of Queensland, your Brizzy, Rockhampton, Bundaberg, Gladstone, Mackay, all of the Queensland cities just ran. Your Adelaide ran, Perth ran. Sydney's not an option to buy in because prices just don't make sense to me. I just don't have that budget.
And it still ran anyway.
It still ran anyway. So Sydney was always out, basically. Canberra cycle didn't look too good there. It's kind of going sideways from what we'd seen. So it's not really the right time. Darwin, interestingly enough, pumped recently off the back of data and a lot of BA activity, investor activity. But what was left? Hobart, right? And looking into some of the data, looking into some of the, I guess, historical information, Hobart or Tasmania as a whole. So you've really got, two main. You've got Hobart, you've got Launceston, and you've got your Burnie and Devonport.
Yep.
As a whole, they kind of move together, but Tassie seems to move after Melbourne, right? Because what happens is your Melbourne pumps, becomes expensive, people move down to Tassie, and so Tassie had its previous run was around, I think, 2015, 16, thereabouts, was when it popped off, and that was right after the last Melbourne boom. So it made a lot of sense. Okay, I bought Melbourne, what's next? Hobart. And we were already seeing data. Sean was looking into the data there. He went down to Hobart to check it out himself and started seeing that there was a reversal, right? So after the big run, consolidation, and maybe a little bit of a trough in prices, generally speaking, there was a shift in sentiment and stuff was starting to pick up. You were seeing that things were starting to get sold quicker, demand was picking up, and the data was shifting. And vacancy, most importantly, was really tight. And supply was really, really tight, or is really tight, and continues to be.
Yeah. And look, choose one of the clients where he needs a lot of data to be convinced. We saw that in Melbourne, and he missed a little bit of the boat there. But this time around, when all I said was Hobart, he did the rest of the research.
Yep.
And then just basically came back to confirm if that was what I was seeing.
Yep.
And before long, he was sold.
That's true.
Right?
Yep.
To recap for all of those who are watching this video for the first time, Hobart, I've been speaking about it since June this year. We're now in December, so it's been 6 months. I've been to Hobart twice in that time, once in September and once this week. I can tell you all things still stay true. Back in June, July, Hobart was showing very, very low rental vacancies with yields of upwards of 5.5%. That has now dropped down to about 4.5% to 4.7% as prices have increased and rents have stayed fairly flat. My property, which is settling today, had an open home on Monday this week, and there were 46 groups through the rental open home, and both of them were rented after the first open home. There is a lot of BA activity that's starting to come through now. I went to an off-market open home when I was there on Monday for one of our clients, and there were 4 groups going through that open home on a Monday at 11:30 a.m.
Wow.
Right? So activity is booming there. Whether you want to believe it or not, it's a great opportunity. And there are significantly varying price points over in Hobart. And so Chu, once again, had a strict budget.
Yep.
Matt,
Yep.
What was the budget?
530 on the dot again.
You've got something with that special number, eh? 530.
It just works out to be that, I guess.
First property was 570.
570, yeah.
Right. Second, 525. Third, 530.
Yep.
Now, where could you get in on that 530? Well, I mean, hold on. 90 days ago, right, when we first started chatting, I said to you, 530 could get you in X, Y, and Z, which was, from memory, Claremont, Berrydale, Glenorchy. Right? But you were only ready to buy, probably about 30 days ago?
Yeah. So I had to wait. I had to wait for my commission, which got paid at the end of October for the September quarter. So I couldn't make a move pretty much until the 1st of November, which is when I lodged for my pre-approval with my broker. And I got that about within a week.
Yep.
But basically, I was waiting. I was ready to go pretty much 2 months ago. So from reaching out 3 months and then, good amount of research and then back and forth, paralysis analysis again. And then finally deciding, right? There was a lot of back and forth with like regional Vic. Do I do this? Do I do that?
Yeah.
So I was pretty much ready to go 2 months ago. But I had to wait on my commission, right? And that was just, I couldn't do anything. So it was really annoying. And also the first home buyers announcement, right? So pretty much that's what kind of kicked this off.
Confounded.
Exactly.
Yeah.
So from, I would say 7th of November, on the exact day I got my pre-approval, an hour later, I happened to come across a property that I literally put an offer down same day. So within probably 3 hours of getting my pre-approval, But during that entire time, I was looking at stuff. I was looking at what prices are, talking to agents and just getting a gauge of what things were going for and looking at the rent. So that's why I was pretty much ready to go as soon as I was in a position to do so.
Yeah, which is amazing, right? So you're waiting on something. Don't wait till you've gotten the pre-approval to start suburb hunting.
Yep.
I think Matt's been able to show that if you get a very good understanding of what's happening on the ground, you'll be ready to go as soon as you get that pre-approval in order, and you'll be faster than everybody else who's literally waiting to do their research once the pre-approval comes in.
Yep.
And Matt, so we started off with Glenorchy, Claremont, Chigwell, Berrydale, and all those at the time, it was quite easy to get a house for 530, 520, 550.
You're talking July, August, right?
July, August, September. Yeah, towards the tail end of September. And for the first time ever in my property investing history, I saw a market moves faster than I could probably even take a long blink with.
Yeah.
Because it seemed like almost overnight, houses that were selling. I remember one quite clearly on Kenbray Street that sold for $595,000 in Glenorchy on 1,000 square meters of land back in August. A corresponding block of land right next door just sold with a worse house for $715,000.
Wow.
Right? And so the market has easily shifted, that's an extreme example, but the market has easily shifted 10% in that time.
Yeah.
So what Matt Chu was looking at, in July, August, that was trading at the 500 to 530 range, today is already going for 580 to 610.
Pretty much 600.
Yeah, pretty much 600. And so that budget's remained the same, but the price has increased on that property. And so Glenorchy, Berrydale, Claremont, they were all ruled out. So where do we land with our most recent strategy session?
Well, we had to look at, what are the options if we still want to go Hobart? And that pretty much left us really with like 2 suburbs.
What are they? Tell us.
Well, Rokeby was one of them,
yep.
Right? And then the other one was Bridgewater. But Rokeby, very quickly, budget didn't make sense. I could only just squeeze 530 if we went fibro. But we decided not to go fibro. Anything brick would have gone for more than 530 already by the time I was looking, which is 1 to go.
Yep.
Or like putting offers down. And, we decided that it just didn't make sense to go the fibro route because in Hobart or in Tas, in general, homeowners don't really like fibro. In Sydney, wouldn't be an issue, right? Because you've always got the land potential. But something like Hobart, I just couldn't take that risk. And I was like, no, I need to find something brick, which led me to my other option, which was Bridgewater. So
again, the man's done his research, like I said earlier, right? And we've spoken about this. In Sydney, the fibro versus brick discrepancy is pretty much negligible. People just want to get in, and you're talking maybe 10, 20 grand, which in the percentage-wise scheme of things is practically nothing to get a better quality of house. However, in Tasmania and in Hobart particularly, there are examples where houses side by side have sold for 50 grand more, which is 10%, 15%, or even 20% more, depending on the suburb, purely from having a brick build. My house in Granny Flat is a fibro house in Granny Flat. From a rental perspective, it's going to deliver amazingly well. However, I oftentimes wish I coughed up that little bit more for brick because I think that particularly in Tasmania today, and time will tell, that divergence between a brick price and a fibro house price, or hardy flex as they call it down there, still continues to exist. Bridgewater, an amazing suburb, 55% public housing in some pockets of the suburb. Not going to sugarcoat it, but it's got a lot of potential and slowly gentrifying.
Yep. It was in the Spanian video, by the way. When Spanian video.
So was Glenorchy.
That's true. That's true. Yep. And some interesting characters insofar as demographic in that area, which, by the way, almost made me pull out of the idea of buying Bridgewater. I was like, I know we like the hood, Sean. I know we know that's where the potential is, just looking at all the other hoods and all the major caps, which we looked at. That almost made me pull out, right? But we looked at the data again. We saw the prices moving. We saw the supply being tight. I know in Tassie, right, at least a property manager didn't really think that, being close to the water made too much of a difference, at least from a rental perspective.
Correct.
However, and maybe that's just because they've got so much coast, they take it for granted. However, over time, right, and as someone from Sydney, right, maybe we have a bias against this, but over time, as, the rest gets built out, I'm sure that the houses that are close to the water will demand a premium, right?
Certain of it.
Over time.
How long will that take? It's anyone's guess.
That's right.
But, it is what it is. So, Bridgewater, brick house, tell us more. You're keeping us in suspense here.
Well, Bridgewater, brick house.
530 grand purchase price?
530 grand purchase price. Still to be obviously settled and rented out, but property manager thinks around 495. So my yield is going to be around 4.8%. Funnily enough, had I purchased this, call it even 2 months ago, could have gotten it for 470, 480, 490. Right? If you look at the recently solds. So
that would be over 5%.
That's correct. Over 5%, right? So prices have moved so quickly. Of course, rent hasn't had a chance to catch up, even though it's so tight, but it will, which means on purchase, we're looking at around a 4.8% yield. And it is on a slope, so it's not the most ideal, but again, there's trade-offs, and the market was really tight. And, I looked at the long run and looked at what that particular house and other houses on slopes had done over the past cycle. And, there was a lot of umming and ahhing, and then we decided that a lot of it is really a much of a muchness, right? And it's just trade-offs to be made. It's not the most ideal, but, the key was to really get in and ride the wave. And so eventually, if I can't sell it for that premium, but it's still ridden at, call it double in growth, then I'm happy.
I think at the end of the day, right, you've hit a few nails on the head there. There's timing the market, there's time in the market, and then there's the actual asset selection. You get all three right, you're holding on to a unicorn, but, less than 5% of investors ever can get all three right, because one will always require you to pay a premium, and that's good asset selection. When the market gets hot, everything will get sold very fast, and the really great assets will get sold for a premium that will no longer make them worth it from a yield standpoint. And so you have to sacrifice and trade off in some way, shape, or form to achieve the outcome that you want. But in my aspect, the most important is timing the market. Because by timing the market, right, if you'd gotten in July and August, you would have already seen 30, 40 grand worth of growth.
That's right.
But it's okay.
That's right.
Right? I don't think you're late to the party at all. You've just joined the party.
That's right.
Now, what's interesting is through the PropSpotter process, the property you bought is actually on market, but you had looked at a couple of properties off market as well, right? And so PropSpotter was able to present you, I think, 2 properties off market.
That's true. Yep.
We didn't decide to go with one because of the slope and the price that they were asking for it. But there was another one that was really good that you'd actually signed a contract on, right? But the valuation didn't stack up. Tell us a little bit more about that, because we're seeing that become a little bit commonplace in Tasmania at the moment.
Well, the thing is, the prices have moved so quick, right? So quick. It's crazy how quick the prices have moved, right? As Sean just described. And so all the data that the banks and the valuers then look at as their kind of benchmark is super behind. You've got data that's way outdated. You've got Bridgewater on H-Tag and CoreLogic, median still showing at 440, right? Find me a property in Bridgewater worth 440 today. Even if it's burnt down. Even if it's burnt down, it'll be going for 440, right? Well, maybe not 400, right? If it's burnt down fully, okay? But that's not happening. So the point is that these valuers, the banks, they're behind the curve, right? By the time they catch up to today's prices, we're already in the future. So they're always, how far behind would you say they are? Like 6 months, 12 months?
Well, I think some of the valuers there are still thinking it's June or July in some suburbs, and it's not the first time that we've come across it. The key problem that I've come to understand, right, is that one, valuers only base it on property values on prices of properties that have settled. And 2, they take a very conservative lens to off-market transactions, right? So number 1, in a place like Bridgewater, where prices have shifted significantly over the last 6 months, right? And we found a case where there was a house selling for low 400s in June or July, and today would easily go for over 500 grand. So you're talking 20% in a period of 6 months.
25 even.
Right?
25.
Yep. Valuers,
early this year, Bridgewater, low 400s.
That's right. And so valuers are taking a very conservative stance because most of the properties that have been recently sold have not yet settled. And so they're taking a very conservative stance on the values they've applied, unless the property is on market. Where the property is on market, everything seems to go to plan. I think this will sort of, as the growth starts to slow down in the new year, the valuers will come to their senses, everything will start to map up. And like you said, HTAC and DSR will reflect data correctly. But for now, it's a bit of an anomaly. And, your options are either to ditch the property or to continue on and cover the shortfall yourself. Or option 3, try a different lender. So in Matt's case, we had to ditch the property because he was only restricted to one lender based on his current circumstance. And we had to go and find something on market, which we did. And to be honest, I think we found either an equivalent or slightly superior property and paid, a little bit more for it as well, given that it was on market. But that's the nature of the game. And so now you've got property number 1 in Perth.
Yep, Perth.
Sitting very pretty in equity there.
Yep.
Right? What, 200 grand?
Pretty much now, yeah.
There you go.
In 2 years.
Property number 2 in Werribee, where we just talked about earlier, sitting 125 grand.
Yep, thereabouts.
In equity.
That's right.
And property number 3 that's yet to be settled. But mark my words, ladies and gentlemen, by the end of the financial year, will probably be 50 grand up in equity, right?
Probably.
And so you combine all those 3 together and you're looking at $375,000 made in 22 or 23 months. Well, if you extend it out to June, July next year, 30 months, right? Purely from property that can then be redeployed to buying other income producing assets, i.e. property.
I.e. more property.
Right? So I'm interested. 3 properties in your belt under 3 years. What next?
More, if possible.
Any idea? Any thoughts?
Well,
Any budgets? Don't tell me 530 again. We're going to struggle.
I mean, it all depends on, the specific timing, right, of when we're ready, what makes sense at the time, right? So, for example, Meadow Heights. Meadow Heights made a lot of sense. I still think it makes a lot of sense today, but I think there are better opportunities as a whole. But say around October last year, Meadow Heights made a lot of sense from a yield perspective potentially as well, because you're locking in that good yield because the vacancy was so tight at the time. But since then, new investors in Meadow Heights are definitely struggling, right? And you can see the yield or the rent flattening. So the point is, I think it really depends what opportunity exists, knowing that the market can move so quick. So I don't know. I don't know what's next. I don't know.
When are you ready to go next?
That's also the other question. So it's a matter of when, not if. I know if is not. I know I'm going to be ready. The question is when, and then I guess the when dictates the where when we do the PropSpotter process again.
Beautiful. Well, look forward to it and helping you get into your fourth property.
Yep.
Hopefully we can tick it over in under 3 years and we'll continue to get you set for life.
Yep. Just keep going. I'll just keep going until as much as I can.
Thank you so much for coming on the podcast today, Matt. And if you're interested in Tasmania, property, or the PropSpotter process, feel free to reach out to us at propspotter.com.au.